Okay, welcome everybody. Matt and Luke here. We are excited to tell you all about our new opportunity that we are going to be doing here in 2025. It's called Bonds Ranch. It's in Fort Worth. We've looked at well over 50 deals this year. Nothing is penciled out. This one exceeds our expectations. We're super excited about it. This is an opportunity to invest pari passu with our lead sponsor, HPI. Essentially, that means we're just going to be investing on equal footing along with them. But like we said, in Fort Worth, um, it's the nation's fastest growing city right now. And there's been a lot of legwork leading up to this that is super attractive. Our lead sponsors have already done all the design, permitting, site selection, asset management is all lined up, and they're going to be overseeing all the construction on the project themselves. HPI, for those of you who don't know, they're a very well established, several decades leader in this space in the industry. This project is downside protected, fully aligned. I mean, as you'll see, we're gonna go to their webinar that they've already recorded about it after Luke and I give you all a quick rundown here. But so much to like about this deal. Um, the development is going to be ready. We're going to be ready to build once the equity is obtained, and we're talking as early as September here. So they're going to be breaking ground, right when we're done and have all of our capital lined up. But Luke, tell them a little bit about the metrics of the deal, the numbers, why we are so excited about it.
Two phases of this deal, and the first of which is 396 units. So Matt alluded to this idea that the first tranche of capital, that will in fact be applied to this first phase. The second phase is approximately 240 units. And so in total, 636 units in totality. That creates a huge, well-hedged property whereby if we've got a couple of vacancies, we've got a whole laundry list of renters paying for their end of the bargain. Because of the nature of the development, there's two tranches and two installments of your investment. The first of which, due here in mid-August, is 72% of your investment. That will be transacted now. The other half, or rather, other 28%, that will be invested and transacted during phase two, which will coincide with a refinance as well as the development of that second phase. So it's important to note it's unique to this deal, but it's a roughly 3/4, 1/4 split as it pertains to the capital and the equity needed for this deal. It is a projected 5-year hold. It's a 17.1% IRR during this period and an anticipated 2x equity multiple. Interestingly enough, because of the nature of the deal, there is a scenario where the last or second installment of your investment may not be needed. What will be talked about here in the second half of the webinar is that idea, the strategy that HPI as the asset manager might take in frankly selling that second phase alongside a completed phase one. So the optionality is also something we're very, very excited about, and you should be as well. Interestingly enough, and unique also to this deal, is that it's a true buy and hold strategy. No distributions will happen on this deal until the sale. Because of this, and because of the size and nature of the equity that's needed to take down a $136 million development, Driftwood is investing in this deal alongside of you as LPs, but we're also creating what's called a special purpose vehicle, an SPV, and to maintain alignment, we'll only be seeking recoupment of the upfront costs if and when this performance of the property exceeds expectations. So know that much like HPI is aligned with their LPs, investing a boatload of money, setting up the structure in such a way that only benefits the LPs first, we're doing the same we're wanting to only recoup our fees if and when overperformance takes into effect. We're very, very excited about this deal, Matt. I can't be more fired up about this opportunity in the DFW area specifically. The deal right now is live, and we are taking commitments. Meanwhile, the wiring details will be shared with you shortly after, and we hope to have this all wrapped up by mid-August. What you're about to see is Rich Bachner, Tim Shaughnessy talking in great detail about this property. Hit us with any questions. Again, Driftwood Equity Partners, email, call Matt or myself. We appreciate you.
Thanks, guys.
Hello, everybody, and thank you for taking the time to join Tim Shaughnessy, who's HPI's multifamily partner, and me, Rich Bachner, who helps lead investor relations for HPI.
We're really excited to bring this opportunity out to you. We've been working on this a long time.
So we recently launched Bonds Ranch, which is a ground up 636 unit Class A multifamily project in Fort Worth. It's an opportunity to invest as a limited partner alongside HPI in the second fastest growing market in the country, Fort Worth. HPI has developed or acquired over $3 billion of commercial real estate since our founding in 1992. We're fully integrated. Site selection, entitlement, all the way through to project and asset management. HPI invests a significant amount of our personal capital in every deal. Mm-hmm. Our approach is long-term. Those of us who have invested from the beginning know that we've been doing this since 1992, and we take it very seriously by investing our own capital in every single deal. We've already released the offering memorandum. If you haven't gotten it, please let me know, and we'll send it to you again. We also have sent out videos of our founders, or two of our founders, Dick Anderson and Kent Lance, talking about why they're investing personally in the Fort Worth project. Today, we're going to cover the structure in more detail. We're going to talk about the market and the submarket dynamics, the site and the design, the unit mix, the finishes. We're going to highlight some of the amenities of the project. We're going to review financials, try to stay awake for that part, comps, underwriting assumptions, the schedule, and introduce the team.
We're going to cover a lot.
Yep. This is an opportunity to invest in a traditional limited partnership structure with HPI as the general partner. We're committing over $10 million of our own capital through land contribution and cash. This is an opportunity to invest pari passu alongside us. The minimum investment is $250,000. We've designed a phased capital call schedule. Approximately 72% of LP equity will be called in August of this year for phase one, and approximately 28% will be called either in late 2027 or early 2028 for phase two. However, should we sell phase one early, it may reduce or eliminate the need for the second capital call. We've structured the returns to be LP friendly and aligned. There is no promote to HPI unless limited partners can achieve a 1.5 equity multiple. The waterfall is as follows: return of capital, 80% of proceeds to LPs and 20% to HPI up to a 2x multiple, and then a 75-25 split to a 2.2 multiple, and 50-50 thereafter. Fees are fully transparent and simple. 4% sponsor fee per phase, covering acquisition, development, financing, accounting, and construction management. 25% at loan closing, 75% monthly during construction, an asset management fee of 1% of effective gross revenue with a $4,000 a month minimum, commencing at the same time our third-party property manager starts. Our fee is directly tied to the performance of the property, making it fully aligned with our investors. Not a fee, but we'll also have reimbursement of project expenses and the carry cost of those expenses at closing. This is not a typical early stage development deal. HPI has taken 3 years and spent millions of our own dollars to get this project shovel ready for you, the limited partner, to invest. Day one, we're going to be ready to go and go vertical. We've de-risked this project significantly by committing time and money to get entitlements and zoning so it's ready for you on day one.
Yeah, it's been a long road to get to this point. We went under contract on this property in 2021. We closed on the deal in 2022. We spent the last 3 years navigating every step of the entitlement process, whether it's zoning, site plan approval, text dot, surface use agreements, easements, floodplain revisions. I mean, I can't count all the things we had to do on this deal.
Yeah, I think it's a big differentiator, right? I mean, it's really de-risking for our limited partners because we've taken that first 3 years and millions of dollars off the table for our LPs.
Yeah, and additionally, we've locked in financing with CIBC Bank, and we have a guaranteed maximum price contract with our general contractor, Blackland. I mean, we're really ready to go. We're breaking ground right after our first capital call.
Yep. And like I said before, it's a great location. It's very close to the Alliance Town Center, which is a high growth area of Fort Worth. And for anybody who knows the DFW area, Fort Worth is just booming.
We're really selective when it comes to sites. For every 100 sites we look at, we probably offer on at most 10 of those. And of those 10, we're happy to go under contract on 1 to 2. So we're really disciplined. We're going after trophy sites, and this is one of them.
And demographics are pretty strong too, right?
Yeah, they are. I mean, this area around our site, household incomes are over $100,000. Population growth is expected to be 15% over the next 5 years.
So when we drove the area, I was really impressed by the retail.
Yeah, we're fortunate about all the retail around us. I mean, it's one of the things that really drew us to this location. Not only the new Kroger anchored retail center 1 block west of our site. This is under construction right now. It'll open well before our apartment community does. We know some of the tenants already lined up, like Starbucks and Chase Bank. But if we go wider, we go out to Alliance Town Center, which is only a couple minutes down the road. There's everything there. This is the premier shopping destination in North Fort Worth. You have Hop Dottie, Torchy's, P.F. Chang's, Costco, Cinemark, DSW, Dick's. I mean, you name it, it's there. And that's such a benefit to our renters.
And Fort Worth has a really strong job base as well, huh?
Yeah, it does. I mean, we've got excellent highway access on our site, so it affords our residents short commutes to major employers like FAA, BNSF Railway, Callaway Golf. The U.S. Mint is a block down the road. They're literally printing money on our street, and hopefully we'll join them with that in a few years. But I think it's also important to talk schools. I mean, our schools are really good. They're highly rated. It's Northwest ISD. We have a recently built elementary school only 1 block south of the site. So our residents can walk their children to school every day if they want.
Let's take a look at the property and the site plan.
Okay. So we have a 28-acre property that we own. It's right off of 287. We have zoning and site plan approval for 636 units across 2 phases. The first phase is 396 units. It has a highly amenitized clubhouse. The second phase is 240 units, similarly is amenitized with its own clubhouse, so it can stand on its own. The first phase is what we'll break ground on this summer.
Great. Can we take a look at the design?
So we design and build with an institutional mindset. We don't plan to hold this deal long term, but we design it like we're going to. So what does that mean? We strive for a timeless design. We use long-lasting materials, and we have thoughtful floor plans. Our units range in size from 605 square feet to 1,377 square feet. We have an average of 835. 67% of those are 1 bedrooms. That's where we see the most demand in this area, are for 1 bedrooms. Every unit either has a balcony or patio. And actually, we have almost 100 private yards on our ground floor units.
Wow. That sounds like a lot of yards.
It is. We definitely build in more yards than our competitors. When I think about when I bought a home, one of the main reasons was I wanted that outdoor space. I wanted a yard. I want to be able to let my dog out. And we want that opportunity for our renters. We want them to stay renters as long as possible. So the fewer reasons we can give them to move out of an apartment or out of our apartment, the better. And I think that's one of the big ones.
So inside the units, what can we expect?
Luxury contemporary finishes, a clean neutral palette. We're trying to appeal to a wide audience. So we have stainless steel appliances, side-by-side fridges with water dispensers, front control glass top ranges, keyless entries, smart thermostats, front load washer dryers. We've got it all. And instead of the cheap glue down vinyl that almost every one of our competitors has as flooring, we use a much higher end flooring product. It really looks and feels like hardwood. And we're also trying to create opportunities for our leasing team to upsell prospects. So in some of the larger units, we built in home office desks, extra storage, dining space, dual vanities, wine fridges, master baths with separate tubs and showers. Residents notice these details. They're picky. Many of the renters are renters by choice, not this necessity. Like we talked about earlier, the people in this area are making over $100,000 a year, and they know what quality is. So we gotta provide it to them.
Let's talk about the clubhouse. My take is it really sets the tone for new residents. It's the first 90 feet in 90 seconds for a lot of folks who are making a decision about where they want to rent.
Absolutely. It's their first impression. So we got to spend some money there. Our clubhouse mirrors the quality and aesthetic of our units. You walk in, you're greeted at the door by our leasing team. It's a bright, welcoming space. You have views all the way out to the pool. And then as you walk from the leasing into the club room, that's a space that's designed both for resident events as well as the residents can use it as a big living room for themselves, a place where they can host their friends for dinner parties and other events themselves. So programming is key. We want the people living at our community to form friendships with other people living there. If they do, it's inevitable they're going to stay longer at our community. They're going to want to live near their friends. So the more social opportunities we have for that, the better it is for our bottom line.
And what about work from home?
We have a dedicated co-working space. Our residents will end up working from all over the property, out at our pool, in the club room, at home. But we wanted a dedicated space really built for this with a lot of natural light, reservable private offices that are plug and play. It's got dual monitors. It's got a camera. We have a conference room with video set up. A space where you can really be productive trying to get some work done.
And it seems like we're also going to have some pretty cool amenities that are going to separate us from some of the other multifamily projects in Fort Worth.
Absolutely. One of those is our golf simulator. This is a golf zone system. It's really fun. We've tried it out ourselves and it's awesome. You can play your favorite course with your friends, or, you can work on your swing, really technical stuff too. And then another thing we're trying for the first time, I don't think anybody's done this before, we're going to give it a shot, is gear lockers. It's automated lockers that our residents can rent things like pickleball paddles, golf clubs, Yeti coolers, an air mattress for their guests, furniture assembly tools, camping gear, all these things that they don't necessarily want to buy but would love to have access to. We're going to rent it to them by the hour or by the day. So it's also great other income for us.
So this is really as much of a place for people to live, but to also have a lifestyle.
Absolutely. And Another amenity we have, everybody's got a fitness center, right? We're obviously going to offer all the high-end fitness equipment that these people really expect to have at this point. But we're seeing the trend towards more outdoor fitness. So
Right.
we want to capitalize on that. We have an over 700 square foot outdoor covered turf area that's got its own equipment with battle ropes and tire flips and other really unique equipment. So you can be working outside or inside. You're looking out over the pool. It's really an exciting place to, get a workout done.
Let's stay outside. What other amenities are we offering?
We've got a resort style pool. It's going to be the best pool in the area. It's awesome. We've got cabanas. We have an outdoor kitchen area with pizza ovens, grills, smokers. And then as we move outside the pool area, we have a dog park with an indoor pet spa. We have a walking trail around the property, and it'll connect from phase 1 into phase 2. It's going to be great for our residents. We've got a pickleball court. Pickleball isn't the sport of senior citizens anymore. Now it's what young people play out at a brewery with their friends. This thing's going to get a ton of use. And then lastly, I'd just point to, we're really building this property for the future. And we're already seeing a lot of the people living at our communities bring, hybrid or fully electric vehicles. So we're designing it towards that. All of our garages, our 40 garages, are set up for EV charging. Plus, we have pedestal chargers throughout the surface parking lots. They're all level 2 chargers. So it's fast charging. It's not that trickle charge. It's going to be great for anybody who has that type of vehicle.
So we're going to transition and talk a little bit about the team involved in making this project a reality. Not only the 200-person in-house HPI team, which is accounting, finance, asset management, but we also have a bunch of great consultants and contractors who are outside of HPI. Tim, will you cover some of the folks you did a lot of work to figure out who you wanted on this project. Who are they, and why did you decide they were the right ones?
Yeah, I'll hit on the big ones. You can see our, almost our full team here, but I'll hit on the most important as we move forward. And the first I'd start with is our general contractor. That's Blackland, formerly called Provident. They're headquartered in DFW. They've built over 15,000 units, including 2 of our competitors that are a block away, the Dawson at Berkshire and Presidium Revelstoke. So they've got a lot of experience in this area. We've also hired an independent construction inspector, Square One, essentially to be an extra set of eyes for us. They'll be on site every single week. We will be almost as well. And then lastly, Graystar, they're our property manager. They're the largest property manager in the country. They've managed every multifamily deal that HPI has built to date. So we've been able to negotiate a reduced rate with them to 2.5%. We feel really confident in this core team.
So let's shift over to the budget and financing.
Sure. So phase 1's total budget is $84.5 million. Phase 2 is $51.8 million. So combined across the investment, $136 million. Returns. So we're projecting, as we talked about, a 5-year hold, selling both phases together in year 5. We project returns to the investor of 17% and a 2.02 equity multiple. We've got a deep bench of lending relationships, over 100 lenders that we work directly with. So no debt broker was involved in this transaction. We get preferential terms with our lenders. We've paid every loan back over the past over 3 decades of deals. Our founders sign personal recourse. So, these preferential terms really benefit investors. CIBC is our lender. They're providing 65% loan to cost. It's an interest-only loan. Our rate is a 250 basis point spread over SOFR. Additionally, we're hedging our rate exposure. So this will cap our all-in rate at 6.65% or better, but still allow us to benefit from any rates that may fall in the future.
So what's the plan for phase 2 and the exit?
Yeah, so we underwrote a 5-year hold, sell both phases at that time, but we have flexibility. We may sell phase one early. And if we do that, we may not need to make a capital call at all for phase two. Alternatively, and as planned, we refinance phase one when we break ground on phase two, and we'll benefit from the operational efficiencies of managing 636 units as one community.
Let's cover rent comps and underwriting.
So our rents are based on today's rents. There's no rent growth until we reach stabilization.
That's pretty conservative underwriting, huh? I mean, you don't see a lot of sponsors who are willing to go that route.
It is. I mean, we have a lot of my partners and I's own personal capital at risk in this deal. So I expect we're going to be the largest investor in this project.
Yeah, at this point, HPI has at least $10 million of its own money in the project. That's not very typical of a co-investment for a sponsor who's to have that much skin in the game.
Yeah, I mean, some other sponsors are even raising that money from outside sources. It's not even really their own investment. It certainly aligns us with our investors. I think that's what's most important. It's how we try to structure everything. We'd rather outperform than stretch to justify a deal. We don't rely on significant rent appreciation. We just want to deliver a quality product that can stand in today's market. So our average rents are $1,760. And early on, when we're looking at rents, we always look at what's the difference between rents in the area and mortgage costs. Some homes immediately north of our site, they're selling for over $1 million. But if we just look at the more modest $500,000 home nearby, the mortgage cost on that deal would be more than double the rents that we're underwriting on our apartment community. And that's the type of disparity we want to see when we're doing our underwriting. But we get a lot more granular than that. We look both from a qualitative level as well as quantitative analysis at all our competitors. So, we do a SWOT analysis on every deal. And let me just show you. Here's an example, Paloma Village. It's a very nice property with a lot of similarities to what we're going to build, but there are some important differences. They don't offer washer and dryers in every unit. We certainly do. Their appliance package is also a step down. They haven't gated their community, so it doesn't have that same sense of security that ours does. And after we look at the community itself, we start to look at the individual units, real floor plans. So here's a side-by-side, our A3 unit versus a similar size unit at Paloma Village. If we just looked at the rents, we wouldn't know that their unit is an awkward shape. It appears to be an interior corner unit. So it creates weird angles. It doesn't allow for access to the bathroom directly from the bedroom, doesn't have as many windows in the bedroom. Our unit also, compared to theirs, offers a double vanity and has a larger walk-in closet. So we take this qualitative analysis and we use it to inform the quantitative side. So that Paloma Village unit we just looked at starts at $1,655 per month. Our comparable A3 unit, we've underwritten to $1,650 per month. So when we consider the awkward floor plan and the other differences we mentioned, I actually think we'll be able to charge a premium to them. But we chose to be more conservative. We've shown our rents in line with theirs.
So investors know that the first capital call is later this summer. Can you walk us through the timeline?
Sure. So that capital call aligns with our construction loan closing. As soon as we call that initial capital, we'll close on the loan and we'll immediately break ground. From there, we've got roughly 15 months until we'll deliver first units and our clubhouse. Construction's expected to take roughly 26 months, and we hope to see the deal stabilize, or at least the first phase of the deal stabilize in month 28. While we're in lease up on phase one, we'll be finalizing the remaining permits on phase two. I'm not talking entitlements. This is administrative permits. So we'll be wrapping that up so that we can break ground on phase two following stabilization on phase one.
Let's bring it home. Any additional thoughts you want to share, Tim?
I just want to say thank you. Whether you're one of our over 100 repeat investors or you're considering investing with HPI for the first time, we appreciate your interest and hope you'll invest alongside us.
Thanks, Tim. We're really excited for this opportunity. And just a quick kind of overview of next steps. If you're interested in wanting to invest, you can do that through the HPI Investor Portal. If you need help, getting signed up for that, please reach out to me, or you can email or call me directly if you want to make an investment. We'll be calling capital this August, and we will be breaking ground soon thereafter. Thanks again for considering HPI and Bonds Ranch. We look forward to building your trust 1 square foot at a time.